Good morning, ladies and gentlemen. My name's Chris Evans and I'm Managing Director of Winsome Resources. For those of you who didn't know, we've been listed on the ASX just over 2 years now, and it's been quite a journey for the whole team. But today marks the biggest milestone in the entire Winsome history, and that is the publication of our globally significant maiden resource at our Adina project. To paint the picture about how globally significant this resource is, I'll reference the work done by our brokers and analysts who judge it to be in the top 5 in Quebec and within the top 20 in the world by tonnes. And I cannot tell you how pleased I am and proud I am to be here presenting this to you today. And the best part of that for me is that it's only the beginning for our resource at Adina. What I mean by that is we have 27,500 metres of drilling that has contributed towards this maiden resource. On top of that, we've got 20,000 metres of drilling still sitting in the labs that by early January we'll have the assay results for. And we will have done a further 5,000 metres of drilling by the end of the year. So this means that we will have 25,000 metres of drilling with which to upgrade the resource in Q1 next year. And to top it all off, and what really sets us apart, I think, from all of our peers, is the fact that we have this great drill program in front of us. We have a definite pathway for expansion for our resource, and we're completely financed to get there next year. We've developed a deliberate corporate strategy for the last 2 years whereby we've made sure we always have money in the bank and we're always financed to achieve the exploration plans we want to achieve. In the current lithium market, many of our peers either don't have the money or will struggle to raise the money to achieve their exploration goals over the next 12 months. And again, that's what really sets us apart. A fantastic maiden resource, a definitive path to expand that resource, and the finance to do it. So in addition to the resource and drilling work we've got going on, we also have a lot of study work going on the ground at Adina. We've got environmental baseline studies being done now, which all contribute ultimately towards our project approvals. We've got infrastructure studies going on, metallurgical test work, a whole lot of that in the lab at the moment, and we should have some results out shortly, as well as work on our camp. And our camp, you may recall, is being expanded from 20 odd to 60 plus personnel, and that's in the final stages of being wrapped up right now. So that from 2024 onwards, we'll be completely independent in the area to pursue our exploration goals. As many of you will know, I've spent a lot of time on the ground this year in Quebec, and I returned about 2 weeks ago from a trip where I spent a very enjoyable few days in the Mysticini community. And the Mysticini community are the traditional owners of our land at Adina, and we make it a real priority at Winsome to make sure that our traditional owners come all the way on the journey with us throughout our project. While I was in Quebec, I also had numerous meetings with the government, government ministers and other regulatory authorities. And as ever, the Quebec government authorities all remain very supportive of our project. So just to wrap up before I take some questions from those who are listening today, I'd like to reflect once more on where we sit today, because it's something I'm extremely proud of. It's just over 2 years since we listed on the ASX, and it's just over 1 year since we first discovered the main zone at our Adina project. In just over 12 months, we've managed to publish a globally significant maiden resource with a whole lot of drill data to come and a whole lot of drilling to come that will see an expansion of that resource in 2024. We're well financed to achieve that expansion, and I think that makes us unique in the lithium space today. And I'd really like to thank our team on the ground who've enabled this to happen. It's been an incredible journey for them and for me, and the team has really built up over the last 12 months, and we're going to continue to expand along with the resource to make sure we deliver all of our project objectives next year. And of course, I'd most like to thank all of you shareholders in Winsome Resources. Without your support, none of this would have been possible, and I look forward to continuing the journey next year with your support. Thank you very much. And now for the next half an hour or so, I'll be available to answer any questions that you have. I look forward to receiving those questions and keeping the conversation going. Thank you. as every other market, is cyclical. That's why we raised a whole lot of money to enable us to pursue our exploration activities for the next 12 months. So I see pricing starting to improve after Q1 next year and throughout the remainder of next year. But the flip side to that, and I think I've said this before in other webinars, is the demand. We see a whole lot of demand from strategic players to engage with us because they, it seems, see a shortfall going forward in lithium. And they're very keen to secure assets like ours that show multi-decade mine lives moving into the future, because their commitment to EVs, as every Western government is committed to EVs, is unwavering, and they've got to secure assets like ours. So although I see, to summarise that, perhaps pricing will improve at some point next year, in my view, but demand in the background from strategics still remains strong. Hasmi has asked about the grade achieved for the maiden resource, which was 1.12%, and what are the chances the next resource upgrade will include a higher grade. One of the things that we looked at when putting out this resource, as everyone does, is we were looking at the cut-off grade versus the tonnes and the grade. Because we used 27,500 metres of drilling towards this maiden resource, and it was roughly at 100 by 100 metre spacing, there wasn't a great deal of infill drilling that contributed towards it. And what this meant is that we approached the development of the resource in a relatively simplistic way, in that the pegmatite body of the main zone was modelled, and then a couple of pegmatite bodies in the footwall zone. Now, that relatively simplistic modelling meant that a certain amount of waste, perhaps more than what we'd like, was introduced into that model. We expect, as we get the results of the 25-odd thousand metres of drilling that will have been completed in the labs by the end of the year through in the first quarter of next year, then we'll be able to upgrade the resource, and that will contribute to us being able to more precisely model the mineralised pegmatites, and that should give us more latitude with the grade in our future upgrades. Anton has asked for a comment on the strip ratio and compared to other deposits. Well, we haven't put any economics or specific mine plans around this deposit yet, but when speaking from having looked at this, and when we look at the model that we put out as part of the maiden resource, you can hopefully see that the main zone is largely at surface, and it consists of one massive body that actually flattens out near the surface. Now, that speaks to a first few years of mining, which will have a fairly low strip ratio because it'll be mining the main zone. And then in later years, the pit will incorporate the footwall zone as well. But I think the beauty of this deposit, and hopefully it's fairly obvious from the models we put out, is that the 58.5 million tonnes that we've put out is all mineable in one pit. And it's not going to be multiple pits with satellite operations. This all looks like a one pit simplistic mining operation. And as we expand further east and west, as we expect to do so with the upcoming drilling next year, we think that this will all continue into one pit. So the 3.1 kilometre strike length we now have known, and which we'll be investigating in its full next year, will ideally be one pit. Mark has asked, with 27,500 metres drilled and another 25,000 metres coming through the labs in Q1 next year, do we anticipate any more drilling beyond that in 2024? Well, the simple answer to that is yes, we expect quite a lot of drilling, and that's primarily what we're financed for next year, that and studies. I think we mentioned somewhere in the announcement, although I understand it was a fairly long announcement, that we expect 50,000+ metres of drilling to be done next year. And that is specifically towards expansion drilling and infill drilling to contribute towards the studies that we expect to come in the second half of 2024. Now, as many of you will know, to put out a scoping or pre-feasibility study level, we need something in the order of 60 or 70% of the resource in the indicated category. Currently, we're 100% in the inferred. So the drilling will be doing three things: expanding on the current resource, bringing more confidence into the resource by dragging more into the indicated category, and also investigating the new pegmatite areas that we've found at Adina, highlighted mainly by gravity surveys, that we want to find out whether those are mineralised. Mark also asks about exploration targets and asks if we are going to publish one. At the moment, no. I think our resource speaks for itself. I think the fact that the 59 million tonnes is over 1,300 metres of strike length, and we've got a total of 3.1 kilometre strike length, and we've got the new pegmatite targets I referred to earlier, that speaks to a story of being able to expand this. We've done a whole lot of drilling, and we're financed to do a whole lot more drilling next year, which should naturally lead to expansion. Now, to put a target on that, I think is not necessary at this point. This is a world-class resource already, and it's going to continue to be so in 2024. I just read some of the comments. It seems I was on mute for the first part, and I apologise for that. A few technical glitches here. Perhaps the comment that everyone missed was on the supply and pricing for next year. To summarise my comments there, I think pricing will remain fairly weak in the first quarter of next year and start to improve after that, and hopefully everyone's share price with that. To us, it doesn't, to some extent, that the pricing in the short term isn't as important to us because we're fully financed to conduct all our activities next year, and also the demand we see from strategic players is very encouraging. We're continually being bombarded by requests to engage, and I think at some point next year there'll be a logical time to do that. Chris has asked, as there's a lot of drilling to be done in 2024, is there likely to be a second upgrade towards the end of 2024? Well, that would make sense. Of course, we don't know the results of that drilling yet, and until we do, it's hard to predict when an upgrade will be. But certainly, there's going to be more upgrades, and drilling naturally will lead to that. I think some of the perhaps catalysts for an upgrade in the second half of next year will be scoping study and then a pre-feasibility study. Chris has also asked, is there a plan for Tilly next year? Yes, there certainly is. Tilly, as we announced not long ago, we've found lithium mineralisation at Tilly. It looks very exciting to us. Some of our neighbours have also discovered lithium mineralisation very nearby. So we'll definitely have teams on the ground as soon as the snow melts in around June. And then ideally we'll commence exploration shortly after that. Drilling shortly after that. Stephen's asked about Canet Exploration. Yes, I think at exactly the same time that we conduct our Tilly exploration, further Canet exploration will be going on. Although we haven't found a great deal beyond the initial fantastic mineralisation that sits just off the road at Canet, it's still such a huge property, 20,000 hectares. And we've been refining our exploration techniques based on the success that we've had at Adina, and we're applying that to Canet. So there's geochem soil analysis going to be occurring. We've done further gravity surveys. We've also got LiDAR, and we've got historical, we've got other historical geophysical work. So all of that's contributing to some specific targeting that I'm pretty confident will lead to success in terms of lithium exploration at Canet next year. Gary's asked to clarify drilling meters. And Gary's comment here is correct. We will have done approximately 50,000 metres by the end of this year. We've done 27,500 that contributed towards the maiden resource. We expect another 25,000 to be completed by the end of the year. And then next year, we're planning on 50,000+ metres. So that should mean by the end of next year, in the order of 100,000 metres having been completed at Adina. Brian is asking about a date on the PEA. The PEA/scoping study we're planning on the second half of next year. We think that dragging enough of the resource into the indicated category is of course a completely necessary part of that. But we're also making sure all the appropriate studies are done. Our infrastructure studies, which I mentioned earlier on, our environmental studies, all leading towards a robust PEA in the second half of next year. Gary's just asked for some clarification earlier on about the strike length over which the maiden resource of 59 million tonnes is over, and that's over 1,340 metres. So once again, we've got a total strike length of 3.1 kilometres of known mineralisation, and that's bounded in the west by the original drilling done by our predecessors back in 2018, where 10 holes were put in and all hit lithium mineralised pegmatite dikes. And then to the east, we put out 3 holes where we found the end of a gravity survey. And bang in the middle of that is the 59 million tonnes that we just published. So there's a whole lot of growth east and west, and to the north, and to the southwest as well, where we've got gravity targets. This is why, again, we don't really see the necessity to put out an exploration target, because we think these numbers speak for themselves. Nicole's asked, can I comment on the top 20 shareholders and if they're selling? Top 20 shareholders, we continue to publish top 20 shareholder information. They actually change very little, a couple of % from month to month, or from quarter to quarter, I should say. We haven't seen any significant selling in top 20 shareholders. There's a couple of questions here from Phil and Rob on strategic interest and takeovers. We've had a significant amount of interest from various strategics, and I'd say that's all the way along the battery material supply chain, from OEMs to lithium miners to traders to battery makers. They've all been of a fairly exploratory nature thus far, and we've very much taken the approach that we're not ready to engage yet. We've got our maiden resource coming out, we've got upgrades to that, and we've got studies coming out the second half of next year. And all of this, we're organically building value in Winsome. So we don't feel the need to bring a strategic on just for the sake of it. But I think there's going to be a point, perhaps next year, where it's going to be worth investigating whether bringing a strategic on, either for external validation or for funding or for the achievement of strategic aims, such as having our product remain in the North American battery material supply chain. Any of those reasons could be enough to bring a strategic on at some point. So that's something we'll be investigating in the background as we continue add value to the company ourselves. Hasmi's asked, is there any major difference between the main zone and footwall zone in terms of grade? Like any pegmatite body, both the footwall zone and the main zone have areas are zonated. So for the main zone, for example, we see generally slightly higher grades nearer the surface. And then in the footwall zone, in the couple of dikes that are modelled, we see slightly different grades. They vary with depth and just the position in the ore body. So the short answer to that is no, we don't see a significant difference in the grade between the two ore bodies. Jake asks, or comments, that Winsome's market cap is relatively low compared to its peers, and why do I think this is? I completely agree that we have a low market cap compared to many of our peers. I think it's about a couple of things. Number one is timing. I think the fact that we discovered the Adina project only a year ago, and we've been talking for a while about publishing a globally significant maiden resource. I don't think the market has quite picked up on that, or didn't believe it until now. And in the meantime, market conditions haven't been as good as perhaps some of our peers experienced when they published their maiden resources. So what that meant is we're starting from a low base now, but I've got no doubt that now that the market is aware of our maiden resource, its global significance, the fact that it is by tonnage top 5 in North America, that is really going to resonate. And it's going to resonate with strategics, as I referenced earlier. They want multi-decade mine life lithium assets that they can really put into their portfolio of supply for the foreseeable future. So I think all of those things will increase our market cap over the coming months. And that's one of the reasons we wanted to publish our maiden resource now. We believe that once it's published, it's going to be on everyone's books. We're going to start to gain recognition, and we'll get by comparison, our market cap will become appropriate to our peers. Jason's asked about the road. I mean, the road is, and isolation, Jason asks about. I mean, we're 50 kilometres from the nearest major road to the north, and we're about 60 kilometres from the nearest major road to the south. I certainly don't consider that isolated, and to construct a 50-kilometre road is a relatively easy task. But the road should be considered in two parts. There's the northern part, which the construction of that will allow slightly easier access. It'll allow us to drive to our camp rather than fly helicopters, and it'll allow some bigger equipment to come in and out. But the main strategic goal for us is a southern road route. The southern road route will hook us up to the Stornoway Diamond Mine, and thus by road to Chibougamau, where there's a rail line. Now, that's in our interest to have that road built by the time we come into production. As I've talked about before, La Grande Alliance, which is a joint venture between the Quebec government and the Cree Nation, already has a pre-feasibility study out for that road, and they're planning on building it somewhere in a 8 to 12-year construction time. Now, we think that can be brought forward, and we think that there's other government funding initiatives available to pay for that. So the construction of that road is of priority to us by the time we come into production, and we are working on that in the background. There's a question from Stephen about incremental lab assays, or are we going to be putting them out or holding off until the actual resource upgrades? I think, as we've always done, once we have a meaningful batch of assays, we'll be publishing those to the market in accordance with our continuous disclosure requirements. Ronald's asked a question if there are any potential key market disruptors that may have an impact on Winsome over the next year or two. He references technological advancements, regulatory changes, competitive entrants, environmental social factors. I think all of those things could change the industry in general, or have a general effect on the industry, or any of those things. For us, I think our path is fairly well set. I don't think technological advancements will change the industry a great deal between now and the time we intend to come in production. Canada, and this is the reason we love Canada and Quebec in particular, is that it's a very stable regulatory environment. The regulatory process is understood. And as I've said before, I think that the approval process, both at the provincial level and the federal level, is not that much different to what we see in Australia. You need a couple of years of baseline environmental data. There's a couple of years of approvals, but that's consistent with any other Western country. So broadly speaking, because we're so well financed and we have our plan set up to conduct drilling and our studies next year, we can't see too many factors that will disrupt us. Now, of course, there's things like bushfires, like what happened this year, which set us back 8 or 10 weeks, which was unfortunate. But we can work around that. And we've got contingency plans in place for next year, should that happen again. Nicole's asked, any comment on Canadian M&A like what we saw in Western Australia? And particularly given that Western Australian assets may be seen as expensive. I think that's a very good question, and I think no doubt that attention will at some point turn to Canada, and in particular Quebec, when there's several very significant resources like ours out there, certainly on par with Western Australia. I think given the M&A activity in WA so far has been perhaps for nationalistic reasons, and secondly because those conducting the M&A already have established operations in WA and can quickly mobilise their construction and mining workforces when they wish to. Canada's a slightly different story, but in the meantime, we are de-risking our project day by day. And yes, I think eventually M&A activity will come to Canada, but we intend to be well prepared by then. We have a market cap up. We have a solid base of shareholders, and I think M&A activity will be handled in an appropriate manner. Vincent's asked, is Winsome expecting to get any funds from Critical Mineral Infrastructure Fund from the Canadian government? That's one of the funds that we believe is available for us to utilise with our planned infrastructure over the coming years. There's also the Canada Infrastructure Bank and numerous others that have funds sitting there waiting to build infrastructure and contribute towards critical minerals projects. So we're investigating all of those at the moment. And Rob's asked about us expanding landholding if we have more exploration success. I think we're always looking for the ability to improve Winsome's position. I think the fact that we're well financed compared to some of our peers will no doubt give us opportunity. And I think there was a lot of land grabbing that's occurred perhaps at a high price in the last few years that again can't be financed to exploration success. So it's something we always look at. But again, our main game, what's going to take us to be $1 billion company, is not necessarily grabbing a lot of land. It's adding value to our Adina project, building up the resource and publishing our studies and getting closer and closer to production on that project. And I think I'll take one more question. And Danny's asked, how likely is it that a standard open pit design would overlap azimuth tenements? And how would Winsome navigate this? So that is an interesting one. As most people know, Canet Exploration, who are a TSX listed company, have drilled a few holes to the south. We're most encouraged by the fact that all of our exploration success and all of our drilling seems to be pointing to the north. So from the main zone, we've got the footwall zone to the north and parallel to it. And then we've got our gravity targets even further north than that. And we picked up the Jackpot project, which we hope will have further exploration success again to the north. So that ground to the south of us plays very little into our exploration and development plans in the future, but it's adjacent ground, and it'd be interesting to see what Canet come up with. Thank you everyone for your time today. That's just about wrapped up the questions. I appreciate everyone's time and I look forward to keeping you updated in the future.